With the day's biggest buzzing business news stories, this is Business at 9. I'm Vikram. Hello and a very warm welcome to the show. First up, it's about Accenture, the IT services provider. Accenture has lowered its revenue forecast for the full year. And the reason they're citing for this is economic uncertainty and reduced client spending on their consulting services. Now, the company is anticipating a full-year revenue growth within the range of 1% and 3%, which means it's down from their earlier projection, which was anywhere between 2% and 5%. So this development means it is going to have an impact on the stock, which is currently underway. Accenture's performance often serves as a benchmark for the Indian IT industry. It provides insights into expected outcomes for Indian IT companies. But look at the kind of hit that we are seeing on the Accenture stock. It's taking a beating in trade today. It's down about 8 percentage points as we speak, and it has been steadily going down as well. We'll see exactly what happens, but Wall Street is really on a tear. So on a day like this, we're seeing Accenture take this kind of hit. What does it mean for the Indian IT industry, for its growth in the future? Let's find out. Sandip Agarwal is fund manager at Sowilo Investment Managers. He's with us on Business at 9. Sandip Agarwal, always a pleasure chatting with you. Tell us about the implications for India's IT industry. Just going by Accenture's lowered forecast already earlier this year, we had both TCS and Infosys reporting downbeat quarterly numbers on the back of lower spending, isn't it?
Yeah, so, good evening and thanks for having me on the show. As you rightly pointed out, the news is a negative surprise. But more interestingly, if we connect it with the Indian IT, I would say that, the numbers of Accenture should be seen in a little more detail. And if you see them in little more detail, what you will find is that there is an adjustment for local currency, and also, the consulting expectation is flattish. So they have brought down basically the consulting expectation, and managed services, they are at mid-single digits. So I think the more comparable business for Indian IT, obviously we also have consulting exposure, but the bigger component or comparable component is the managed services, where Accenture is still expecting a mid-single digit kind of growth. So I think, we will not have so much of impact as reflecting in Accenture stock price to start with. And secondly, I would just like to give a simple submission that whenever this guidance cuts or postponement of salaries happen, or delay in bonuses happens, that is the last leg of the down cycle generally. And I think we are broadly there because US has seen sharp interest rate hikes in last few quarters, and I think the impact of that is being felt now.
Talking about the US, of course, the RBI in its bulletins has flagged off slowing global growth concerns. But look at the US economy. It seems to offer a very different story. It's a story of resilience against the odds. The Fed has held interest rates. It's indicated 3 rate cuts this year. And the US is a large market for India's IT industry. Look at the kind of tear that we are seeing in IT stocks even today, all across the board, whether they're chip makers, whether they're the likes of Apple, or whether you're looking at Amazon. All of them are moving up quite smartly. So what exactly, when it comes to the US markets, what are we missing over here? Because that's a large chunk for India's IT players.
No, absolutely. A company like Microsoft, which is trillions of dollars in market cap, it has gone up by 67% in last 1 year. And NASDAQ itself is up almost 50-60% from the bottom. Most of the stocks are 2x, 3x, or between, 15-20% to almost 300% returns. Large names I'm talking about, the big 7 in the US. So obviously, despite all the fears of hard landing in US economy, these stocks have been doing well because everyone has broadly discounted the near-term pain, and people are now seeing what lies ahead. I think we do have dependencies on the big 7 in the US because we do a lot of product engineering work for them. But I would only say that, we also have other businesses, so we should not directly only correlate with that. And I believe that India being an outsourcing hub and low-cost producer of services, we should be always last hit. So I am not so pessimistic, and I am not reading too much into the Accenture.
Correct. So if you had to really advise investors right now, a very short advice, how would you say? Is this the time to find opportunities to buy into IT stocks at lower levels, or would you rather they stay away at least for the moment?
I think for the large cap, this is the time to start buying. Definitely, it is a time to start. For some of the expensive names in the mid-cap space, maybe, you can wait.
All right, fair enough. That's where we leave it. Sandip Agarwal, thank you very much for joining us with your perspective on the outlook for the IT industry, going by the lowered revenue forecast that Accenture has made, which is having a telling effect on the Accenture stock. Thanks very much for joining us. Meanwhile,